Thanks for joining me on my market report. My name is Mike, and if you're new to my channel, my videos, we do these videos on mortgage rates and what impacts them on a daily basis. We kind of go into what's driving them, whether it's something from the economic calendar, headline news, or geopolitical. Sometimes there's a change in the sentiment with investors, and this kind of maybe confusing to those on the outside may not understand what's going on because maybe some good news should happen for us and we should get better rates, but however, the opposite is happening. And we're kind of here to try to get that information out to you. So if you're kind of following mortgage rates, hopefully this will give you a little bit more information so you can help make an informed decision for yourself, whether if you're looking to refinance or purchase and lock in rates, or perhaps you may be in the industry and just want to follow along. This will hopefully be a good guide for you. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states, so if you need assistance in either, we could certainly help you folks out. But we're also more importantly a resource for you folks. So if you guys just got questions about things, whether if it's about rates or you guys got questions about programs or process out there, well, we're here to help you guys out as well. So please feel free to reach out to us anytime. Without further ado, we'll just jump right into it. We'll start off with the economic calendar today. Today's a little light in that term, in what data is being provided. But we'll start off with this a very minor one. It's brought to you by the MBA, which is their mortgage loan activity report, which is brought out on a weekly basis every Wednesday. And I just kind of touch on that. We can see that the purchase loan applications increased from week over week, as did the refinance. Now, typically refinance wouldn't really go up when we see rates rising, but however, there's people that were on the fence now are jumping back in, and that's what's kind of leading an increase in the refinance. And of course, some of them might be taking money out, cash out refinances while rates are still relatively low. Now, here's the only really data that we look at today, and this is our first look of the jobs data this week. We have the ADP that gives out Wednesday. These are for the month of January. Tomorrow we'll get our initial jobless claims, but the big one will be Friday for the Bureau of Labor Statistics, the non-farm payrolls, and the unemployment rate. So we'll get those coming in. So the initial rate back in December was 807,000 new jobs. However, that got revised lower to 776,000. Forecasters count for 207,000. However, that came in a huge miss at a loss of 301,000 jobs. So instead of having an increase of 207,000 new jobs on the private payrolls, we actually had a loss of 301,000. Now, the industries that were most affected were services and goods, and then we also had small businesses were most adversely affected. Then shortly after that was large businesses, then medium-sized businesses on that. Now, a lot of this is being attributed towards the Omicron, but there might be a mixture of that with the, as we talked about some of these other jobs data report videos I've done. Around this time period, we get a lot of the seasonal workers, so it could be a mixture of seasonal as well as Omicron reason for that. So with Friday's jobs reports, I look at this. A lot of people are now forecasting lower their forecast for Friday's number. So right now that's about 150,000 jobs, but some people think that that too could be perhaps in the negative as well. So we'll wait and see what happens. Sometimes you kind of have to take the jobs data right around this time period from December and January, actually from the holiday season to until about February or so, with a grain of salt for the most part. So. What's going on right now? We got corporate earnings reports. We got some biggies that came out. Google came out with some really good ones, but of course, you got a couple of the other ones that didn't do as well. But Google or Alphabet plays a big weighs pretty heavily in those indexes, so that's helping them out. They came out after hours yesterday. Tonight after hours will be Facebook or Meta, whatever they are now. They'll be coming out with theirs as well. But so let's take a look at mortgage-backed securities. We had a lot of volatility in the market. Stocks, same thing. They've been choppy up and down. They were going negative and positive. We kind of had something similar today. As you can see, we did start off a little higher than we left off yesterday. We were in this negative, but we didn't. Luckily for us, we didn't finish at the lows of the day. We kind of settled for more or less the highs. Closer to the highs, at least halfway there. But we started off slightly higher, and now we've been working upwards. We're up about 19 basis points, which will translate better pricing today. than what we saw yesterday. So that's helping us out. We're getting close to the 25-day moving average. As you see, the 25-day moving average coming lower, which is making it easier for us to attain that. So here's the look at the volatility we saw earlier today. Um, as you saw, we dropped quickly, then that's when we rose, and then kind of dropped a little bit and rose. So we've been pretty choppy, but a steady wave rising for the most part as well. At least after the was it 6 o'clock roughly? Yeah, almost around 6 o'clock is when we finally started rising a little bit. That was early on timing. And let's see here. Yields kind of did the same thing. Yields were pretty choppy as well. I heard yields were touching at 1.8 at one point. It was way up here, as you see, a touch off for 180 range, and then now I've been breaking below this uh, technical floor, and now actually approaching its 25-day moving average, almost touching its 25 moving day average. So right now it's just at 1.7, just under 1.75, which is a good start for us. And we'll see if we can get below this. As you see here, this has been a pretty strong area as well. Has this level here at the 170 range has been nearly impossible to break below. I don't know if we'll get below that, but at least we might be able to get close to it as much as possible, which will obviously help out mortgage rates in the near term as well. So with that in mind, of course, like I said, mortgage rates a little bit better today. So lastly, we'll go over the average uh, conforming loan rate or mortgage rate that's out there. These do have points built into it. We'll start off with uh, the start rate over here. We'll wait till it goes back to 30 years at now at 3.69%, and then the 15-year is at 2.96. So if you've been watching these for a while, and I kind of cover these, you've noticed that these have been rising steadily especially since like November, and we had that big spike in January where rates automatically shot up dramatically. So without further ado, we're pretty much at the end here. You guys got any questions or whatsoever, please reach out. We're here to help you guys out as much as possible. If you guys like these videos, please help us out and share and like the video. We greatly appreciate you guys taking the time to watch us and to take a view. We greatly appreciate it. And thank you again for watching. We look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.